Okay, sir. So cost of capital related concepts completed. Capital structure also completed, right? So the next, and I explained about the time value of money related basic stuff. Okay. Then fine. The next concept, valuation of share based on PE multiple and Gordon's dividend model. So generally we know the name called PE ratio. When it comes to the SPM books, they used a name called PE multiple. Just name differ. That's it. Concept is not. So PE multiple or PE ratio both are same only, Rana. So okay, then fine. First, we need to understand the concept of PE ratio. Everyone knows how to calculate PE ratio. How, Nana? MPS divided by market price per share divided by earning per share. That is called one share point of view, Nana. We can calculate total point of view also. The total point of view is nothing but market value of equity divided by EA ESH. Market value of equity divided by EA ESH. This is the second alternative, that is called total approach. So there is a next alternative we have, Nana. Calculation of PE ratio. PE ratio equals to 1 divided by return on equity. 1 divided by return on equity. 1 divided by return on equity. 1 divided by, how to calculate return on equity? EA ESH divided by equity. Equity value only, na? Can I name it as market value of equity? Market value of equity. If you simplify this formula, what happened, Nana? 1 into market value of equity divided by EA ESH. These are 3 ways we have to calculate PE ratio. So the basic question is MPS divided by EPS in per share point of view. When it comes to the total point of view, market value of equity divided by EA ESH. When it comes to the shortcut is there, if there is a return on equity, PE ratio is nothing but what, Nana? 1 divided by return on equity. The next thing, PE ratio always expresses answer in times. PE ratio always expresses answer in times. Okay. Now, when it comes to the PE ratio, we need to know in 2 point of view, Nana. One is company point of view, another one is investor point of view. Company point of view and investor point of view. First thing, what PE explains means simple. What is the denominator? EPS, na? For 1 rupee of company earnings, how much is the market price? Sir, clear? For 1 rupee of market price, how much MPS increased or decreased? That expressed in the answer of times. See an example, there is a MR of company as well as CET. Both are tire manufacturing companies, no? Now when it comes to the PE ratio, MR of company is 48 times. CET is 25 times. Clear? Now this 25 expresses divided with 1, divided with 1. For 1 rupee of earnings, market price fluctuation is how much? 48 times. When it comes to here 1 rupee of equity earnings, market price is how much? 25. Now apply this logic. Company point of view, which one is the best one? Company point of view, which one is the best one? MR of company or CET? Why? Because for 1 rupee their market price is 48 times. 48 times. When it comes to the investor point of view, here also 1 rupee, here also 1 rupee, here I am paying 48 times, here I am paying 25 times. Which is the best option? 25 times. Nana, clear Nana? When it comes to the company point of view, we are focusing on highest PE ratio. When it comes to the investor point of view, you are focusing on lowest PE ratio. Guys, clear? So this is the explanation, this is the calculation about the PE ratio. Now, what is our heading, Nana? Valuation of share based on PE multiple. Now simple, when it comes to the PE ratio, MPS divided by EPS. What is the requirement? MPS na? Shuffle the formula. What happened? PE ratio into EPS. PE ratio into EPS. You already know how to calculate PE ratio. As well, you already know how to calculate EPS. How to calculate EPS, Nana? EA/ESH divided by number of shares. You already know how to calculate EA/ESH as per income statement. Sir, clear, sir? Now, when it comes to how to calculate number of shares, Nana? How to calculate number of shares? Market value of equity divided by MPS. You will get what? Number of shares. Over book value of equity divided by face value. Balance sheet capital divided with face value. What you will get? Number of shares only, no? Sir, clear, sir? The simple man, market value of, first forget about this, equity share capital equals to number of shares into face value. Now I want number of shares. Number of shares equals to what, Nana? Equity share capital divided by face value. Every time we will not get this information. Sometime instead of equity share capital, what we have, Nana? Market value of equity. Market value of equity. Equity represent what? Reserves and surplus plus capital. That's why here you need to divide it with what, Nana? MPS instead of face value. Clearer? Now when it comes to the valuation, number of shares purpose we are using market price if is there. What we need to use, Nana? Market price. Don't assume face values. Don't assume face values. Even though there is a face value is given, for number of shares purpose, what we are using, Nana? Market price. Why? Because face value is a what value? Current value or historical value? Historical value. Simple, apply your common sense. MR of company face value is 10 rupees. Market price is 1,50,000 odd. If you want to value the MR of company, are you consider 10 rupees or 1,50,000? 1,50,000. That is the logic behind the market price calculate. Number of shares considering of market price. Clear up? Okay. So P ratio, P related MPS calculation, are you okay? So how to calculate P ratio related MPS? MPS equals to P ratio into what, Nana? EPS. That's it. About the valuation based on P ratio. Okay. So our next discussion, MPS or P naught or V naught. These all are names are same only, Nana. Value per share, price per share, market price per share. Based on Gordon's dividend model. Based on Gordon dividend model. When it comes to the based on Gordon dividend model, here are two things you have to learn, Nana. Forecasting period perpetual period. What does the mean for perpetual period, Nana? Indefinite life dividend if any receives. Indefinite dividend any you receives. Infinity years. That is called perpetual life. What about the forecasting? The forecasting represent noun period, Nana. The forecasting period represent what, ma? Noun period. Either n equals to 3 years or 5 years or 10 years. If you know the period, that is called forecasting period. If you don't know about the number of years, it means what, Nana? How many years, Nana? Infinite years, huh? That is called perpetual life. Now here you are calculating P naught by considering of forecasting period information as well as a perpetual period information. Then fine, when it comes to the forecasting period, here you need to use a concept of without growth and with growth. Without growth and with growth. When it comes to the perpetual period also, you have to use without growth concept, with growth concept. Now when it comes to the without growth concept, that V naught or P naught equals to expected dividend divided by R minus G. From here onwards, I am not using KE, I am using a name called R, required rate of return. That is nothing but KE. Required rate of return. Sorry, just R. Which concept it is? Without growth. Next, when it comes to the with growth, value per share equals to expected dividend divided by R minus G. This is a logic we learned in KE calculation. Nana, clear, Nana? When we are applying these formulas, Nana? What period calculation? Perpetual period. With growth and without growth. Clear? Then fine. When it comes to the without growth and with growth under forecasting period, see the example, you will get a clarity. This is the first day of year 1, first year, second year, third year. Infinity years. Clear? Now, if you calculating P naught for these 3 years is known as forecasting valuation. Forecasting valuation. If you calculating for here to how many years? Infinity years. This is called what, Nana? Perpetual valuation. Now MPS equals to what, Nana? P naught of forecasting valuation, P naught of perpetual valuation. Clear? Okay. Take some numerical example, Nana. There is information only for 3 years. There is information only for 3 years. Which concept it is? Forecasting valuation. Nana, clear, Nana? Now, what is the concept? First concept? Without growth. Without growth. Now, when it comes to the without growth, the company dividend equals to 6 rupees, Nana. Company dividend equals to 6 rupees. First year 6. What about the second year? What about the second year? 6 only, na? Why 6? There is a no growth. R ante return earnings kadra, required rate of return Spm&Bv లో. నీకు ఇంట్రెస్ట్ ఉంటే క్లాస్లో కూర్చో, డౌట్ మైండెడ్ క్లాస్ చెప్పను నేను ఫస్ట్. నీకు ఇంట్రెస్ట్ లేకపోతే వెళ్ళిపో. So when it comes to the first year, the dividend received how much, Nana? 6 rupees. What about the second year? Because of without growth, there is a no incremental value, 6 only. Third year also 6. Clear now? Now where you are at day 1 now, that future dividends, year 1 ending, year 2 ending, year 3 ending. What you want Nana? P naught represent, P naught or V naught represent current market price only now. How we get current market price? What are the future values you have? You need to bring to present. That's why you need to multiply with present value factor or percentage 1 year, present value factor or percentage 2 years, present value factor or percentage third year, not 3 years, third year. 3 years represent sum, 2 years represent sum. I don't want 2 years, I want second year, I want third year, I want first year. Nana, clear Nana? For example, R equals to 10% ma. Now please tell me the present value factors. 0 point, what next? 82, what next? 7. Now if you multiply with the dividend, you will get P naught. How much Nana? 6 into 0.909. 5.4. Round off with the two numbers ma. 4 5. What about the second year? 4.96. What about the third year? 4.51 na? 51. Now the P naught is nothing but sum of this Nana. What about the sum of these three? 14.92. This is the way to figure out forecasting P naught with growth or without growth. Without growth. Clear up? Next Nana. With growth Nana. DPS equals to 6. R equals to 10%. Growth equals to 5%. You are at first day, you are doing evaluation at first day. In the type on the discussion of KE calculation, I explained D naught is different, D1 is different. D naught represent current year dividend, D1 represent expected or next year. If there is a no clarity about the what they given D1 or D naught, you need to take a call. It is called D naught. It is called what Nana? D naught. Now this 6 is this day related information. But where you are calculating? First year ending na? How we get first year ending? Plus 5% of growth. Then you will get first year value. How much Nana? 6.3. When it comes to the second year value, how we get a second year value? For this 6.3, you need to add a second year growth. 6.615. For this second year value, you need to add a next year growth. 6.946. Round up with the two numbers ma. 96 95 95. Sir, clear sir? This is a way to calculate with growth. This is not a P naught calculation. This is just a expected dividend calculation. Sir, why this calculation you not did in this example 1? Without growth. If there is a growth, last year value, this year value is different because of a growth aspect. Nana, clear Nana? So where you are? Day 1 only now. So we are not taking day 1 value. What we are taking? Expected of first year value. It means this one only now. This one, this one. Now you are at day 1. We need to figure out P naught. Multiply with what Nana? Present value factor what percentage? 10%. How many years? 1 year. What about here? Present value factor 10%, second year or 2 years. 2 years represent annuity factor. Second year represent present value factor. What about here? Present value factor 10% third year. Now please tell me the present value factors. 0.909, 0.826, 0.751. Please multiply with the expected dividend, then you will get a present value. How much, Nana? 5.73. What about here? What about here? 5 point. Now the P naught equals to sum of all 3 years value. 16.41 na? Sir, clear sir? This is a way to calculate what model, Nana? Forecasting dividend with growth model. So this is a way to calculate what, Nana? Forecasting without growth. Any doubt on these two concepts? Sure? Okay, then fine. I am coming to the concept of perpetual with growth, Nana. Perpetual with growth. Now see this example. They said D equals to 6, Nana. R equals to 10%. For first 3 years, growth equals to 5%. For perpetual life, growth equals to 2%. Sir, clear, sir? So how many growth rates is there? 2 growth rates is there. Are you okay? See this timeline. Two transactions is there. What are the two transactions? First 3 years called forecasting. From third year ending to perpetual life is called perpetual valuation. Hope you guys clear? Okay, then fine. See. Expected dividend. What about the current year dividend? 6. For this you need to add up growth. What growth? Short term growth or long term growth? First 3 years means short term growth. How much is the short term growth? 5%. Now you will get expected dividend. How much is the expected dividend? 6.3. For this, if you add another year growth, 5%, how much? 6.61. 2 chapandra 6 1 5 round off. 615. Okay. Add next again growth. 6.95. If you bring these 3 values to first day, that is called perpetual valuation of current market price. What about the forecasting? What about the perpetual? What about the perpetual? I said perpetual calculation equals to expected dividend divided by R minus G. Now what is the expected dividend? What about the last dividend? For this you need to grow up with what growth rate? Nana, clear, Nana? Now please tell me the expected dividend. 6.95 into 1 plus 0.202 na? Divided by, what about the R, Nana? 0.1. What about the growth rate? 0.05 or 0.02? 0.02. It's talking about what period? Perpetual period. If you solve like this, you will get a value. How much is the value? 80? 88 point? This is a perpetual value. This is a perpetual value. It is in a future or a current, Nana? This 88.61 in future or present? Future. Which year future? Which year future? That is the point. Why? Because end of the year I don't know. Infinity is the end of the year. But we need to bring that 88.61 to present value. Na? Which year is the future for this 88.61? Third year or fourth year or fifth year or infinity year? Third year ending. When the transaction occurs, that is nothing but this transaction happening at end of the third year, beginning of the fourth year. End of the third year and beginning of the fourth year. Which year ending it is? Third year ending. For this, see, multiply with present value factor. Present value factor for first year 10%, 1 year. Second year present value factor 10%, second year. For this present value factor 10%, third year. What about this 88.61? When you are doing that calculation, which year ending? Which year ending, Nana? Third year ending. Fourth year beginning onwards. But there is no concept of beginning. There is a concept of ending. Multiply with what, Nana? Present value factor 10%. Which year? Third year only. Nana, clear, Nana? Now please tell me the present value factors, ma. 0.909, 0.826, 0.751, 0.751 only. This is the policy we are following in discounted cash flow method also. In discounted cash flow method, instead of dividend, they will give cash flow. So cash flow have a three definition: CFAT, FCFF, FCFE. We will discuss later. But which model it is? Dividend model. Gordon dividend model. Sir, all examples are you understand? Sir, clear, sir? This is the question we have, sir. You have doubts, please ask me. Only one point you need to understand: this present value factor calculation. Which year we are doing a present, which year to we are bringing to present. Where transaction happens. Which year ending? Third year ending, fourth year beginning. Nana, clear, Nana? Clear? Sir, if there is a no change in growth rates, for example, here also 6%. Here also 6%. At that time, you can bring from second year or third year, no problem. Why? Because that is called constant growth model. Nana, constant growth model. But when it comes to our example, there is a no concept of constant. There is a short-term growth rate as well as long-term growth rate. So short-term growth rate for forecasting period, long-term growth rate for perpetual. Clear? Okay. So there is some shortcuts, Nana. How you calculate D1? D0 into 1 plus growth. How to calculate D2? There is a two logics, Nana. D0 into 1 plus growth power 2. 2 years growth adding. ORR, directly you can take D1, already 1 year growth added. You need to add 1 year add. Sir, clear, sir? You can apply what you want, not a problem. This is shortcut. Okay? Then fine. Here valuation of share based on PE multiple and Gordon's model. So when it comes to the PE ratio, how to calculate, Nana? MPS equals to PE ratio into EPS. As well, total point of view also we can calculate. Total point of view, we are not using a name called MPS, we are using a name called market value of equity. Now, when it comes to the Gordon's dividend model, forecasting dividend, perpetual dividend. When it comes to the forecasting dividend, information is there, means noun period information is there. That is nothing but 5 years, 10 years or 20 years. When it comes to the perpetual dividend represent infinite life. Next, without growth, with growth, without growth, with growth. So if it is a without growth, just D1 divided by P0. You will get perpetual value. Here D1 divided by P0 plus growth, perpetual value. So this is the example without growth. You can observe every year dividend is the same. You can observe this example. Why? Because there is a what concept, Nana? గ్రోత్ ఆఫ్ 12%. 2 ఎగ్జాంపుల్స్ ఐ కవర్డ్ నాన్న, నోట్స్లో కూడా ఉన్నాయి. లేదు సార్ మాకు ఆ టైంలో ఎందుకు కావాలంటే టైం ఇస్తాను, రాసుకోండి స్పేస్ ఉంటే. కావాలా అది? ఓకే. Just update the notes, Nana. That's it. You can use R equals to KE is nothing but required rate of return. The point I said clearly, required rate of return. సో కొంతమంది ఎట్లయిపోతున్నారంటే క్లాస్లో మరీ ఇన్ డెప్త్ పనికిరాదు, ఫ్యూచర్లో గుర్తుపెట్టుకోండి ఈ మాట. చాలా ఫీల్ అవుతారు ఎందుకు ఇంత డెప్త్ నేర్చుకున్నాం అనేసి. ఆర్ ఏంటి, కే ఏంటి, లాంగ్ జీ ఎందుకు రాశారు, షార్ట్ జీ ఎందుకు, అట్లా ఉండదు. క్లియరా? సో మీ ఇష్టం ఇంకా మరి. సో R represent KE only. Here onwards in textbooks they provided instead of KE R. That R represent required rate of return. I think one problem is there. Please solve if you're not writing this extra content. One minute, Nana. Problem number 12, Nana. Nana, if you want clarity, mention here without growth forecasting. Clear? Out of line not mentioned detailingly, Nana. So this is a without growth forecasting valuation. With growth forecasting. For valuation purpose, what you want? Expected dividend or current year dividend? Expected dividend. Why? Because there is a growth concept. If there is a no growth concept, current year as well as expected both are same only. Anyone completed? Completed. Huh? Same this side, this model only, na? But I think they not provided DPS, they provide EPS and payout ratio, na? Or DPS, EPS and payout ratio. So how we get DPS? That also I clearly mentioned. DPS equals to EPS into payout ratio or 1 minus retention ratio. డిపిఎస్ ఇచ్చారా మళ్ళీ ఈపీఎస్ అంటున్నారు సార్ అవుతా చెక్ చేయండి సార్ ఈపీఎస్ కాదంట డిపిఎస్ఏ అంట current year are expected. They clearly they said I think current year dividend. Nana completed ma. So what about the problem number Nana? What is the required rate of return given in the question paper? How many years is the forecasting? 3 years, sir. What about next? 4 to infinity, yeah. Here the 4 represent not year ending, Nana, 4 represent beginning. Or if you doubting that, go with here 3 also not a problem. What does the mean for 3 to infinity? Third year ending to infinity. Sir, clear, sir? Okay. What about the expected dividend? What given in the question, Nana, given information? Current year dividend means D naught. How much ma? 2 rupees. R is given. Required rate of return 13%. Growth mentioning. For 3 years growth is there. For perpetual life also there. So for forecasting growth how much Nana? 15. For perpetual growth Nana? 4%. Guys clear? See the calculation Nana. So when I want here D1. 2 into 1 plus 0.15. How much ma? 2.3. I want D2. I said 2 logics is there. So you can directly take 2.3 and 30 year growth. How much ma? 2.65. D3. 2.65 1 year growth. 3. 0.04. Now when it come to 3 to infinity, there is a separate calculation. Out of flow student, what he do means 3.04 into, they will add growth, that's it. That is called what? 1 year related. What you want? Perpetual. If you want perpetual, you need to divide it with R minus G. If there is a no growth, R. Nana, clear Nana? Now D4 3.04 into 1 plus 0.04 long term growth. That is 1 year value. I don't want 1 year. I want what Nana? Perpetual. Divided with 0.13 minus 0.04. Answer? 30 point. Go with the 35 Nana, no problem. Here there is no logic of point value considered or not considered Nana. Round of values is possible in FM. Now when it come to present value factor calculation, please. 1 divided by 1.13. 0. Sir, when it come to news book, sir, after point they consider 3 values with round off with fourth one. If they specifically given, consider specification. If they specifically not given, consider after point 3 values with round off with the fourth one. Now what about 0.885, 783, 0.693. What about here? I hope you know the reason also. It is happening at the end of the third year. Now please tell me the present value of expected dividend, Nana. 2.3 into 0.885. 2.04. Next. 0.71. 2.11. Just 0.7. What next? Sir, here 3.04 into 0.693. How much, sir? 2 point. Sir, growth add avadam valla neeku value perigindi ikkada. 2 point. This one right only, no? 0.7. 2.07. What about here? 2 point. ఒకటి చెప్పండి రా. అరే ఇక్కడ ఉంది కదా నంబరు 3.04 into 0.693 ఎంతరా? 2 point. What, Ramesh? What next, Nana? 24.26. Sum of all 30.48. Nana, clear? So this is the way to calculate Gordon's dividend model, Nana. Okay. I think one concept is their growth calculation. Growth. If growth rate is not given, we need to figure out if there is a indirect information. Anyone? Gordon model is there. ROE into retention ratio. B into R. ఇంటర్లో చదవలేదు నాన్న, ఇంటర్లో ఉంది అది. ఇక్కడైతే నాకు నీట్ లేదు, అందుకు చెప్పలేదు. క్లియరా సార్? యాజ్ వెల్ ఐ థింక్ టుడే సీన్ దట్ meme in Sendil about calculator, SFM. That also be one of the topic under growth calculation. So how they give means, they give 10 years back dividend is 10 rupees. Clear? After 10 years dividend is 14 point something. Now between the 10 to 14 point something, growth is there or not, Nana? Yes or no? That is a indirect information. That 14 point something is known as future value, 10 rupees is known as a present value. With help of that steps, you have taken a root 15 times. That can be calculated in 2 ways, Nana. You can take 15 as well as 12. You will get same answer only. Root 15 times. Next, minus 1 divided with n plus 1 into equals to, if you take top 15, here also 15. If you take top 12, here also 12 times. Both will be possible. That is a growth calculation. Sir, okay na? So that calculation here in SPM also is there. The concept name called capital annual growth rate, CAGR. In that CAGR we are using that concept only. That is nothing but root value calculation, ma. That is called what, Nana? Root value calculation. So if you are happy with that 15, go with the 15, not a problem. Don't learn newly 12. I following 12 times, but 15 or 12 give the same answers only. Different faculty following different things. నేను మీమ్లో చూశాను కాబట్టి చెప్తున్నాను నాన్న. ఓకేనా? ఓకే, then fine. So few more problems is there here. I think we finished up to 6. Seventh one. Let us assume that shareholders of Miss Alka holds the share of A Limited for what period, Nana? Infinite period. A Limited, a matured company giving a constant dividend of rupees. There is a no growth only, na? Okay. Share every year. Miss Alka expects 12% return. Can I name this called R, Nana? That is nothing but KE. Her investment A Limited, there would be a Limited for Mr. Alka would give by the present value of dividend received forever. So the formula name is called P naught only, na? That's why you need not to bring from future. Why? Because if there is a forecasting and perpetual, there is a discussion of present value factor multiplication. But here there is no discussion of forecasting individual years. That's why the name we are using is what, Nana? P naught or V naught. So which model it is? Perpetual. Infinite is nothing but perpetual. With growth or without growth? So expected dividend divided by R only, na? Now expected dividend is how much, Nana? 3 divided by R, 0.12. Answer? 25 per share. Now come to the 8th one, Nana. They are extending the above example. They are extending the above example means applicate manaki strike ayipovali, growth untadi ante. Nana, clear, Nana? So extending our previous example, Miss Alka hopes that A Limited will give a dividend of rupees 3 per share. What year? Now what is that 3? D1 or D0? Expected. For expected purpose I used a name called D1. Nana, clear, Nana? Okay. If there is no information of next year, I said already, you need to take a call. The call is current year only. You need to grow up with 3 into 1 plus 0.06. At that time you will get expected one. MCQ purpose, Nana. Okay, then fine. So V0 equals to expected dividend divided by R minus G, no? What about the expected dividend? They said only expected dividend 3 divided by R. So above extended example, above 0.12, no? Growth rate 0.06. Answer 50. Clear, sir? Next, ma. Come to this problem number 9, Nana. Problem number 9. Estimating what value, Nana? Terminal value. Unity Partners is expected to have a earnings in a 10 years 12 per share. Can I name it is called EPS, ma? Can I name it is called EPS? They said clearly earning per share. Here they uses a name called earning. Here they uses per share. Earning per share. Okay. A dividend payout ratio is 50% and required return is 11%. At that time, the dividend growth rate is expected to be fall to what percent, Nana? For in perpetuity. So there is a no discussion of what, Nana? Forecasting. There is a discussion of perpetuity. With growth or without growth? With growth. They said clearly here. How much? 4%. Okay. And trailing PE ratio. Nana, in notes, you need to change one point, Nana. Here. Strike off this. We have a different PE ratios, Nana. On that One of the PE ratio name called is called tailing PE ratio. The second one name is forward PE ratio. So tailing PE ratio point of view, EPS related, how many months related you are considering, Nana? 12 months. If you considering past data for EPS calculation, that is called tailing PE, Nana. If you considering future EPS, how you get future EPS? Estimation. Sir, clear, sir? If you take estimation, that is called forward PE ratio. Clear? See, when it come to here, current market price divided by EPS for 12 months. That is called tailing PE ratio calculation. When it comes to the forward PE ratio, current market price per share divided by expected EPS, Nana. Expected EPS. Expected EPS. The name itself saying, no? What does it mean for forward? Past or present? Past or present? Not past, not present. It talks about future. Nana, clear, Nana? It considered future EPS. At the time we are using a name called forward PE ratio. Forward PE ratio. Simple, we already calculated EPS, that is 12 rupees. Okay. Question says that in future we are expecting 2% extra. Now what about the 12 rupees? Tailing EPS. What about the 12 rupees into 2% extra? Forward EPS. Nana, clear, Nana? So come to here. PE ratio is forecasted. I hope you understand the meaning of tailing PE. Sir, clear, sir? Trailing PE ratio is forecasted to how many times, Nana? So PE ratio is given, that equals to how many times? 8 times. Estimated the terminal value at the end of the 10 years using Gordon growth model and PE multiple. First dump the information, what they given. Problem number? What's the first information you identified? EPS, huh? Yes or no, ma? EPS not or EPS 1? Current year or future? There is no clarity about this sentence. What next? Said, partners are expected to having earnings in a 10 years of 12 per. The dividend payout ratio is 50%. What is the EPS, Nana? 12. Dividend payout ratio 50. Okay. Next. Required rate of return. How much, Nana? 1. Growth, how much, Nana? 4%. Huh? That only information we have. Now first I am using Gordon's model. I think they asked the first one. Okay. When it comes to the Gordon model, are you using EPS or DPS? That name itself, Gordon dividend model. Nana, clear, Nana? DPS. First figure out the DPS. EPS into payout ratio. What about the EPS? 12. Payout ratio? 50%. 6. Now point you have to understand. They said clearly EPS is expected. There is no information relating to DPS. Nana, clear, Nana? If you are using EPS for calculation, that is even. But what you are using? D. Are you okay? Now, P naught equals to expected dividend divided by R minus G. What is the expected dividend? 6, huh? No, 6 is a current year. What about the expected? Plus growth. 6 into 1 plus 0.04 divided by 0.11 minus 0.04. What, Nana? 89.14. Next, Nana, P multiple point of view. MPS or P naught, both are same only, na? P ratio into what, Nana? There is a no concept of expected EPS, current year EPS. Just you need to consider EPS. Okay? Tailing P means past only, no? Now, P ratio given in the question paper, how many times? 8 times. What about the EPS? Answer 96. Are you okay? Before problem number 10, solve problem number 11. Why? Because December 23, they asked for 7 marks. This basic question. The same question is there in CMA final, Nana. Sorry, CA final. Security valuation. Everyone easily solve case 1, Nana. ప్రతి ఒక్కటి చేసేస్తాడు కేస్ 1. Why? Because perpetual dividend with growth model. Yes or no? Completed. What is the answer? They said 2.5 is a current dividend. What do you want? Expected. 2.5 into 1.02 divided with 8%, 8.5%. R minus G. Answer 30. How much is the answer? 30. Okay. Case 1 completed. How many marks were expecting out of 7? 2 marks. Half, at least 3.5. Na? They're asking 2 questions. You solved 1. Minimum expectation is 3.5. But that entire stuff involved in case 2, Nana, not in case 1. What you said is right only. They will use 2 marks only. Now see the point 2, Nana. Assess stock of Achal Limited whether it is overvalued if the stock price is 35, return on equity is 9% and EPS is 2.25. Support your answer with complete workings. For that word, they will give remaining 5 marks. Complete workings. Now, based on case 2 information, how many ways to calculate MPS? That is the point. As per case 2, how many ways to calculate MPS? As per point 2, how many ways to calculate MPS? నాకైతే కంటికి ఒక మోడల్ కనపడుతుంది. అర్నింగ్ విత్ గ్రోత్. అర్నింగ్ విత్ గ్రోత్ మా. How to calculate KE? Earning model with growth. E1 divided by P naught plus growth. If you shuffle that, what you want? What do you get? P naught. E1 divided by R minus G. EPS is there. Growth rate is there in the question. And R also there. Can I find out that? Yes or no, sir? Clarity ఏం లేదు. నువ్వు ఐడెంటిఫై చేసుకోవాలి ఎన్ని మోడల్స్ పాసిబుల్ అవుతాయి అనేసి. Hope you guys clear. Now the point student do a mistake, they will consider R equals to 10.5%. R equals to what, Nana? 10.5. But come to the point 2. R is what, Nana? Return on equity. Instead of 9%, if you take 10.5, problem is gone. ఎంతో కష్టపడితే కానీ నాకు ఆ మోడల్ గుర్తురాలా, వచ్చి కూడా తప్పు చేసి వస్తా. సార్ క్లియరా సార్? నెక్స్ట్, on that case too you can also use PE ratio. On that case too you can also use PE ratio. Yes or no? No? How? That is why I explained PE separate calculation. How to calculate PE ratio? 1 divided by return on equity into EPS, you will get what, Nana? MPS. Please tell me the PE ratio. 1 divided by 9%. 11.11 times. It's not a percentage. 11.11 times. 11.11 into EPS. Specifically mentioned EPS 2.25. 11.11 into 2.25. What, Nana? Now 25. So, understand logic. What you calculated is your capability. That is called estimated value. How much your estimated value? You are ready to spend that much of amount on that share. How much you are ready to spend, Nana? 25 rupees. But in market, how much it is? 35 rupees. Overpriced or underpriced, Nana? Overpriced. Clear? You need to compare at the time of overvalue or undervalued. What are the things you are calculating? That is your capability. You need to compare with actual. What is your capacity, Nana? You are ready to spend up to 25 rupees, but in the market the price is 35. So more value or undervalue? More valued. Nana, clear? That is one of the logic to figure out MPS. What is the second logic we said, Nana? Earning growth. Now what about the even? What about the even? 2.25 into 1.02. Expected EPS is came. How much is the expected EPS? 2.25 into 1.02 divided by 10.5 minus 2 or 9 minus 2. 9 minus 2. Why? Because that case specific ROE is represent what, Nana? Required return. How much, Ra? 30? What is the 32.75? You are ready to spend maximum up to 32.75. But in the market, overvalued. If you do that working notes, you will get 7 out of 7. ఎగ్జామ్లో ఇవన్నీ ఫిగర్ అవుట్ చేసుకోవడం అంత ఈజీ కాదు, వదిలేయడమే. నాన్న క్లియరా నాన్న? సిఏ ఫైనల్ నుంచి తీసుకొచ్చాడు. సిఏ ఫైనల్లో ఉంది, నేను సెర్చ్ చేసి దొరికింది నాకు అది. సార్ క్లియరా సార్? పోనీ అట్లీస్ట్ స్టూడెంట్ విల్ ట్రై ఈపీఎస్ విత్ గ్రోత్ మోడల్ క్యాలిక్యులేషన్. ఇఫ్ యూ వై? బికాస్ పీ రేషియో లాజిక్ ఎవరో తెలుసా? 1/ROE అనేది ఆ టైంలో తెలుసు, నేర్చుకున్నాం. ఆ టైంలో ఎలా గుర్తు వస్తుంది అసలు? సార్ క్లియరా సార్? సో దట్స్ వై ఈవెన్ ఇఫ్ యూ రైట్ ఈపీఎస్ విత్ గ్రోత్ మోడల్ క్యాలిక్యులేషన్, దే విల్ గివ్ మార్క్స్. ఓకేనా? సో వెన్ ఇట్ క్యాలిక్యులేషన్ కావాలా? Not there in notes also, na? Not there in notes also, Nana. Please add, Nana. If I add here. What about the page number? అక్కడ బుక్లో సొల్యూషన్ అయితే ప్రాపర్గా ఉంది, అది హ్యాండ్ మేడ్ డ్రాఫ్టెడ్, అది రాసిందే ఉంది సొల్యూషన్, నోట్స్లో లేదు. సో నోట్స్లో రాసుకోండి, మళ్ళీ చెప్పలేదు అనుకుంటారు. కేస్ 1, P0 equals to D1 divided by R minus G. What about D1? What about D1? D1 is not there, I think. D0 is there. How much, Nana? 2.5 into 1 plus 0.02 divided by For that case, required return is 10.5% only. Up to that, required return not changes. Required return change in case 2. So 0.105 minus 0.02. Answer? For this question, they are not asked overvalued or undervalued. Nana clear Nana? They just asked answer. That's why here you need not to write comment. Undervalued or overvalued. When it comes to the case 2, they are asking about undervalued or overvalued. I identified two things. It can possible to calculate with help of PE ratio as well as with help of earning with growth model. So first, MPS or P naught equals to PE ratio into EPS. Yes or no, ma? Now there is no information of PE ratio in the question, but we know the concept. What is the PE ratio? 1 divided by return on equity into EPS given in the question paper itself. EPS 2.25. Now 1 divided by what about the return on equity? 0.09. That is nothing but 11.11 times into 2.25. Answer 25. So when it come to earning with growth model, P naught or MPS equals to E1 divided by R minus G, na? Therefore R equals to what, Nana? R equals to what? Return on equity mentioned. Now what the EPS is given is expected or current year? Current year only. How much, ma? 2.25. How you expected? 1 plus 0.02, na? అపో ఇన్ఫర్మేషన్ ఇక్కడ లేదంటే పైన కన్సిడర్ చేసుకోవచ్చు. అడుంటే చూడు ఫాలోయింగ్ అనేసి ఉన్నది తీసుకోవాలి, లేనిది పైన ఇన్ఫర్మేషన్ డంప్ చేసుకోవచ్చు. డివైడెడ్ బై వాట్ అబౌట్ ది ఆర్ హియర్? 0.09 minus 0.02. Answer? What, Nana? 79. Overpriced. This also overpriced. Nana, నువ్వు రివర్స్ కంపేర్ చేసినావంటే అండర్ ప్రైస్ కనపడిద్ది. క్లియరా? యూ నీడ్ చెక్ విత్ యువర్ క్యాపబిలిటీ. నేను అంత పెడతానా లేదా అనే దానికోసం నువ్వు క్యాలిక్యులేట్ చేసుకుంటున్నావు. సో ఎంతవరకు పెట్టగలుగుతావు నీ దగ్గర ఉన్న ఇన్ఫర్మేషన్ బేస్ చేసుకొని. పీ రేషియో పాయింట్ ఆఫ్ వ్యూ 25 రూపీస్. ఎర్నింగ్స్ విత్ గ్రోత్ మోడల్ పాయింట్ ఆఫ్ వ్యూ 32.75. బట్ ఇన్ మార్కెట్ రియల్ వాల్యూ 35. ఎగ్జామ్ క్వశ్చన్ నాన్న. 90% స్టూడెంట్స్ రాయలేదు దాన్ని. ఫస్ట్ థింగ్ ఆ పీ రేషియో ఇన్ఫర్మేషన్ గుర్తురాలా చాలామందికి. అండ్ సెకండ్ థింగ్ దే ఫైండ్ అవుటెడ్ దెర్ ఇస్ ఏ ఎర్నింగ్ గ్రోత్ మోడల్ బట్ దే కన్సిడర్డ్ ఆర్ ఈక్వల్ టు 10.5%. That's why definitions are important. Cost of capital says that it is a minimum rate of return. When it comes to the IRR or ARR says about it is a maximum rate of return. Sir, clear, sir? Return point of view we are using maximum, cost point of view minimum. Sometimes they both are same also. Clear, sir? Completed? Illustration number 10. This question newly added in our workbook, Nana. Anyone? Go and check solution on one mistake they did. There is not a mistake. We can do both the ways. I said already. Number of shares calculation. We can take face value as well as market price. But when come to the keep that point in valuation, we are using MPS only. Clear? But they wrongly taken in the solution. Forgot about that. Why? Because there is no impact because of that calculation. What is the soul of the question, Anna? Company have a 4 lakh extra profit. Company have a 4 lakh rupees of extra profit. Now in front of them, two options is there. With help of that 4 lakhs, can we pay extra dividend? Not dividend, that is extra dividend. Nana clear Nana? Option 2. Algen pay chesedi repurchase our shares. Buyback. Okay. Now the saying is that due to that extra dividend, MPS is changing or not? Due to that share repurchase, MPS is changing or not? That is the question, Nana. Sir, clear, sir? Now for the two option, you have to figure out MPS, ma. Are you okay? Now if you figure out that MPS, based on the two, you need to compare which MPS is more. If I pay extra dividend, at that time MPS is increasing, or if I repurchase the shares, my MPS is increasing. That is the calculation. Okay. Now think logically, if dividend paid by a company, extra dividend, any impact on EPS? If company paid extra dividend of rupees 4 lakhs to their owners, any impact on EPS? Why? Because after EPS only we are paying dividend, na? Are you understand the logic, na? Okay. Any change in MPS? Any change in MPS? EPS is not changing. If P ratio is changes, MPS also changing. But there is no information regarding to P ratio changing. చెప్పలేదా మనకి P ratio ఎంత చేంజ్ అవుతుంది అంత చేంజ్ అవుతుంది అని. If they specifically given, we will take that changed P ratio. Are you clear? It means P ratio is constant, EPS also not impacting. What about the market price? Not changing. What about the market price? 20 na. If you pay extra dividend, there is a no change in MPS. Are you guys clear? Next, Nana. If you repurchase shares, any impact on P ratio? No, they are not mentioned. They are not mentioned about the P ratio. Okay. Any changes in EPS? Any changes in EPS? What change? Number of shares will be decreased. How to calculate EPS, Nana? ESH divided by number of shares. Nana, if you issue shares, your shares will be increased. If you buy back your share will be decreases, Nana. Nana, clear, Nana? EPS is same only, but what impacted? Number of shares. If denominator decreases, answer what happen? Increases. Equal ముందున్న ఆన్సర్ డినామినేటర్తో ఆపోజిట్లో రిలేట్ అయి ఉంటుంది, న్యూమరేటర్తో సేమ్ డైరెక్షన్లో రిలేట్ అయి ఉంటుంది. మ్యాథ్స్ లాజిక్ అది. సార్ క్లియరా సార్? పాయింట్ అర్థమైందా? ఎందుకురా, ఇంతకుముందు 85,000 షేర్స్ ఏమో ఉన్నాయి, ఇప్పుడు 65,000 షేర్స్ ఉన్నాయి. ఈపీఎస్ ఎక్కువ షేర్ అవుతా తక్కువ షేర్ అవుతా? ఎక్కువ షేర్ అయితే. ఇంతకుముందు 85,000 మందికి పంచుతున్నాం, ఇప్పుడు ఎంతమంది పంచుతాం? 65,000 మందికి పంచుతాం. ఈపీఎస్ పెరిగినట్టే కదా. క్లియరా? If EPS changes, PE constant, market price changes na? How much? That is a calculation. Now come and check the question, Nana. The two alternative in terms of affect the price per. They are asking about effect on price of the share with EPS usage, PE ratio usage. That's why in solution itself they taken first point what, Nana? What? P ratio constant for two options. Why? Because ఆ ఎఫెక్ట్ వల్ల P ratio ఇంత తగ్గిద్ది ఇంత పెరిగిద్ది అనే క్లారిటీ క్వశ్చన్లో మెన్షన్ చేయలేదాడు. కాబట్టి వాట్ వీఆర్ యూజింగ్ ద కామన్ సెన్స్, PE ratio remains constant. Nana, clear Nana? Okay, then fine. Please tell me number of shares. Please tell me number of shares. Here they consider what Nana? Face value. If you consider face value, how many? Okay, instead of consider that book market price. What is the market price? 20 rupees. How many shares? 85,000. Amount in thousands. 85,000 shares. Now observe, ఇక్కడ వాడిందేమో 85 బట్ పైన క్యాల్కులేట్ చేసుకునేది 170. క్లరికల్ ఎర్రర్ నాన్న. సో నువ్వు ఒకటి గుర్తుపెట్టుకోవాల్సింది ఏంటంటే ఇన్ ఎంటైర్ వాల్యుయేషన్ వీఆర్ క్యాలిక్యులేటింగ్ నెంబర్ ఆఫ్ షేర్స్ బేస్డ్ ఆన్ ఎంపీఎస్ ఇఫ్ దెర్ ఇస్ ఎ ఎంపీఎస్. సార్ క్లియరా సార్? ఓకే దెన్ ఫైన్. టోటల్ నెంబర్ ఆఫ్ షేర్స్ హౌ మెనీ నాన్న? 85,000 shares. Amount of dividend you are paying Nana? 4 lakhs. What about the DPS Nana? Amount of dividend divided by number of shares. What about the amount of dividend? 4 lakhs. Number of shares? 85,000 is the correct Nana. వాడు మనోడు బుక్ ఫేస్ వాల్యూ తీసుకున్నాడు, దాని పక్కన పెట్టు. 4.71. Due to this 4.71, any impact on your PE ratio? Any impact in your EPS? No. If there is a no impact on PE ratio and EPS, there is a no change in MPS. That's why current market price will be reflected. If you choose alternative one, there is a no use for your organization. Kabatti extra dividend level pay cheyadu. Nana clear Nana? Instead of that, you can use another purpose. What is another purpose? How much you are using? 4 lakhs per share. How much Nana? 20. What is the answer? How many shares you are buybacking again? 20,000 shares. Company have how many shares Nana? 85,000. Out of that buyback 20,000. Now what about the shares in the hands of a company? 65,000. You are sharing earnings for this 65,000 people. Now please tell me the EPS calculation. EA ESH divided by number of shares. Now EA ESH is not given in the question. Can I find out? EPS nela find out chestam. EA ESH divided by number of shares. Ippudu naaku em kavali? EA ESH. Shuffle the formula. EPS into number of shares. Already is there na. Now what about the EPS? What about the EPS Nana? 2 rupees. 2 into how many shares is the point? 65 or 85? Why 65? Nana, earnings will not impact due to repurchase Nana. Unna earnings ni valaku panchutam. Point to be understand. Total earnings, number of shares ఇంతకుముందు ఎంత ఉందో అంతే ఉన్నాయి ఎర్నింగ్స్. బట్ ఇప్పుడు ఏం చేంజ్ అయింది? షేర్స్ తగ్గాయి కాబట్టి ఈపీఎస్ చేంజ్ అయింది. నువ్వు మళ్ళీ 85,000 తీసుకుంటే నీకు ఈపీఎస్ మళ్ళీ 2 రూపీసే వస్తుంది. పాయింట్ టు బి అండర్స్టాండ్. దట్స్ వై యూ నీడ్ టు ఫిగర్ అవుట్ ఫస్ట్ ఈక్విటీ ఎర్నింగ్స్, ఎగ్జిస్టింగ్ ఈక్విటీ ఎర్నింగ్స్. ఆ ఎగ్జిస్టింగ్ ఈక్విటీ ఎర్నింగ్స్ కదా నువ్వు కొత్త వాళ్ళకి పంచుతావు. హౌ టు గెట్ ఎగ్జిస్టింగ్ ఈక్విటీ ఎర్నింగ్స్? ఎగ్జిస్టింగ్ షేర్స్, నాట్ న్యూ షేర్స్. వాట్ అబౌట్ ది ఎగ్జిస్టింగ్ షేర్స్? 85,000. How much Nana? 1 lakh. Now previously we are, see logically, previously we are sharing this 1,70,000 rupees to whom? 85,000 people. But we are sharing now 65,000 people. Now EPS is impacted. How much Nana? 2.61. Hope you guys clear. Now this is EPS. I want MPS. PE ratio not changes na. Assumption. How many times? PE ratio. PE ratio also we need to figure out ma. EPS, MPS divided by EPS. MPS how much? 20. EPS 2. 10 times. Now 2.1 into 10 times. How much na? 26 point. Now tell me ra, if you gives extra 4 lakh as a dividend, there is a no impact in your market price. If you repurchase your shares, your market price is how much ra? 26.1. Current market price 20. Because of this action, what is the market price? 26.1. Which action is the best for the organization? Repurchase of shares. Nana, clear, Nana? So solution is neatly there, Nana. See here, problem number 10. Estimation of value per share for two alternatives under PE multiple. Given information EPS and MPS. With help of that, can I figure out PE ratio? How? MPS divided by, Nana, rectify it, Nana. Two times I used MPS. Just rectify it. MPS divided by EPS. How many times, Nana? 10 times. So number of shares. In book they calculated with help of face value. Even though there is a not provided face value, they take an assumption. Face value లేదు అక్కడ 1700 క్యాప్ అవుటే ఉంది. ఓకేనా? Now P ratio remains constant for what, Nana? Both alternatives. I am checking MPS changing only because of EPS. That's why P ratio remains constant. Now, if pay 4 lakh as a dividend, MPS is how much, Nana? 20. Why? Because P constant, EPS not changed. If buyback, Nana? If buyback, what happened? Previously, ఎంతమంది పంచుతున్నాం? 85,000 people పంచుతున్నాం. ఇప్పుడు ఎంతమంది పంచాలి? 65k. What happened? EPS will be changed, na? Number of shares buyback, 20,000 shares. Number of shares after buyback, 65. New EPS, EAESH divided by number of shares after buyback. That ABB represent after buyback. Next, how to calculate EAESH? EPS into number of shares. What shares, Nana? ఉన్న ఎగ్జిస్టింగ్ అర్నింగ్స్ని 65,000 పీపుల్కి పంచుతున్నాం. క్లియరా? సో ఇన్స్టెడ్ ఆఫ్ ఇఫ్ యూ టేక్ బోత్ ఆర్ 85,000, EPS here also not changing. What about MPS? 20 only. Are you okay now? Now EPS is how much, Nana? 2.6. Now please calculate MPS. P ratio into new EPS. 10 times into 2.6. 26.1 na? Case B they are asking. What's the case B they are asking, Nana? Comment, as per option 1, MPS 20. As per option 2. So accept alternative 2. Because of that, your market price what happen? Increases. So this is the basic related questions of valuation of shares and market value of firm, Nana. So you can observe for one problem we need to learn multiple concepts. Clear? So the point in Spm&Bv, it is a scrap subject. In this subject there is a collection of all problems, all subject related problems will be there. Sir, clear, sir? సో ఇక్కడ నువ్వు జస్ట్ కాన్సెప్ట్ నేర్చుకొని ఆ ప్రాబ్లమ్ సాల్వ్ చేసేదానికి ఆ పాయింట్ ఆఫ్ టైంలో లాజిక్నే తీసుకో. మొత్తం పట్టుకొని పాయింట్ టు పాయింట్ వెళ్ళావంటే జీరోకి వెళ్ళిపోతావు. సార్, క్లియరా సార్? You can go and check the notes, concept will be there and that related problems will be there. If any note point is needed, I will mention it clearly. Sir, clear, sir? Prepare like that only. Why? Because it is a scrap subject. If you want, check your board book. సరదా తీరిపోద్ది బోర్డ్ బుక్ ఓపెన్ చేసి చూసామంటే. లింక్ లేకుండా ఉంటాయి ప్రాబ్లమ్స్. సార్, క్లియరా సార్? సో నీకు ఆ ఇష్యూ పోవడానికి పాస్ట్ పేపర్ క్వశ్చన్లు కూడా దీంట్లోనే యాడ్ చేసేసారు. మళ్ళీ దాంట్లో కొన్ని ఎర్రర్స్ ఉంటాయి. సో ద ఎర్రర్ ఈస్ నథింగ్ బట్ వెన్ ఇట్ కమ్ టు ద పర్పెచువల్ వాల్యూ క్యాలిక్యులేషన్, విచ్ ఇయర్ యూర్ డిడ్ డిస్కౌంటింగ్? థర్డ్ ఇయర్ ఎండింగ్ నా? సమ్ టైమ్ దే విల్ కన్సిడర్ ఫోర్త్ ఇయర్ ఇన్ సొల్యూషన్. ఫర్ దట్ దే విల్ నాట్ టెల్ ఎనీ లాజిక్. సో ఇప్పుడు స్టూడెంట్ ఫీలింగ్ ఏంటి? థర్డ్ తీసుకోవాలా, ఫోర్త్ తీసుకోవాలా? బట్ ఐ సెడ్ క్లియర్లీ, వెన్ ట్రాన్సాక్షన్ హ్యాపెన్స్, వెన్ యూఆర్ డూయింగ్ ఏ క్యాలిక్యులేషన్, దట్ ఈస్ అ లాజిక్. వాళ్ళు చేసుకుంటే చేసుకొని మనం ఏం చేయలేం దానికి. ప్రతి కొత్త పాయింట్ ఎలా నేర్చుకుంటాం? సార్, క్లియరా సార్? ఓకే దెన్ ఫైన్, టేక్ ఏ బ్రేక్ సార్. Sir, YouTube classes only 5 only, sir. సో ఆఫ్టర్ 5 classes లైవ్ విల్ నాట్ దేర్ ఇన్ యూట్యూబ్. మీకు కాదులే, కొంతమంది దానికోసమనే ఉన్నారు.